Despite the market downturn, Ripple has been busy acquiring other businesses. Their acquisition of G Treasury for $1 billion was the most recent. The actual money hasn't even begun flowing yet, with XRP futures ETFs being live, so they aren't going to fritter away $1 billion on this. Following the approval of the spot XRP ETFs and the implementation of the ISO 222 standard, well, that would generate the interest in XRP that the market needs to restore its liquidity. The acquisition of G Treasury by Ripple is a huge step forward. We can see an example of a Swift application profile that uses G Treasury as its supplier right here in this paper. With this purchase, Ripple gains access to resources formerly reserved for corporate treasuries, expanding its reach beyond that sector. Fortune 500 financial teams, overseeing trillions of dollars in capital, are being introduced to the XRP ledger. Global Fortune 500 corporations trust G Treasury's network of more than 13,000 banks and $12 trillion in transaction activity. Additionally, I documented this topic in a video where Swift collaborates with Consensus. Many believe that XRP's days are numbered due to Swift's decision to work with Chainlink and Ethereum rather than XRP in this pilot program. Why? It's funny how Ripple, the owner of G Treasury, is a certified partner of Swift's, providing hosting for Swift's Alliance Lite 2 platform and connecting global banks. Even still, nobody is claiming that Ripple is dead anymore on social media, forgetting entirely about the fact that more than 11,000 banks have successfully tested XRP on Swift's network and disregarding the code that demonstrates this. Thus, existing treasury procedures can now incorporate Ripple's RLUSD and XRP settlement possibilities thanks to this acquisition. Thus, corporate finance has reached its last stretch. By pure coincidence, this is exactly 1 month before Swift's global ISO 222 integration takes place, as the company showcases its implementation of the standard on Swift.com. All financial organizations involved in international money transfers will be affected, according to them, and the full advantages of the ISO standard can only be achieved by its complete implementation in this case. In essence, that's what's needed to link all the pipelines so that money can flow freely here. Furthermore, end-to-end will not function in the absence of properly connected pipes. Those who are upset with the XRP price movement clearly don't get the big picture. Additionally, the CBPR plus coexistence period is expected to conclude next month on November 22nd. At its meeting in June of 2024, the Swiss board reconfirmed the date for cross-border payment instructions. The intriguing thing is that in 2020, Ripple became the first blockchain business to join the ISO 222 standards group. This allowed RippleNet to interact with traditional financial institutions that were also following the ISO standard using the standardized API. Even more bizarre is the fact that I just copied the name G Treasury when Brad Garlinghouse made this revelation. Since I have previously done a plethora of movies demonstrating the meaning of these words on the Gematria calculator, I was astounded by what I pasted into it. The Simpsons, Donald Trump, The Matrix, and a few of these videos are among the channel's most popular content. As odd as it seems, it's all pointing to Ripple and XRP again. As we scroll down the page, we see that G Treasury appears as 804 in English, Gematria, and 134 in simple Gematria. This makes it number 1, but also really computed number 2. Take a look at what shows up when you search for it using English and basic Gematria. Ripple XRP, Solar Eclipse, XRP, and the Simpsons Jim Parsons all appear as the same simple integers when searched in English. Mr. Jim Parsons, television's most beloved scientist, would be my go-to when I need an explanation of Bitcoin. Although I'm truly pretty awesome, people think I'm nerdy. For that reason, I've come to this place to wax poetic on the fascinating topic of cryptocurrency built on distributed consensus. Kachina Dol. The breakthrough is in, XRP moons, and stable genius is at the helm. I mean, really, is there anything more glaringly clear than that? And for those who claim it's all in the mind of the conspirator or completely arbitrary, then why doesn't it say Ethereum here if it's random? Why does it not mention Chainlink? Then why does it not mention Solana? Ripple XRP, XRP. Why is that written? In addition to Ripple and XRP moons, did you hear that Ripple just acquired G Treasury for $1 billion? In this case, I do not believe a coincidence exists. There seems to be a mix of strategic planning at work here. They're engaged in a spiritual game of five-dimensional chess. As the new global order, it is also bound to happen. So many people think XRP is linked to the beast system that will trigger the end of the world. This is the truth, albeit that's a subject for another video. In contrast to gold's meteoric rise to new all-time highs, the cryptocurrency market has been experiencing a retreat. When gold hit a peak following a big rise like this one, the market for cryptocurrencies went on an unprecedented surge while gold leveled out. So right now, the crypto market is seeing this extreme retreat, and gold is overvalued and displaying conjunction on important indicators. Then, if past events are any indication, cryptocurrencies will break out of this 3-year decline that began in 2022 in this falling wedge as soon as the gold market reaches its peak and begins to move sideways or downward. Returning to our current position in 2019 and possibly even January of 2021, you can observe the stochastic car size at 50 and 21, so there is still a chance that gold might go up, but other assets, including those outside of the top 10, could go down. The current trend is downward. Residual stress levels are 39. Therefore, it is premature to say that altcoins have bottomed out. But when that bottom is reached and the market reverses, it will most likely be followed by a correction in gold prices and an explosion in Bitcoin and the cryptocurrency industry as a whole. To help you understand why BlackRock and other large Fortune 50 companies have been quietly purchasing cryptocurrency, preparing these exchange-traded funds, ETFs, and making a profit from their crypto holdings, using the tried and true methods taught by our research team inside Altcoin Pro, I've included a link to our 13-minute video on the subject in the description below. For the simple reason that holding $10,000 worth of cryptocurrency means forgoing $300 in passive income per month. Being sluggish means you're passing up a free 3 to 8% extra monthly yield while it's sitting on an exchange like Binance or Coinbase. Hodling is presented as a strategy to just wait for prices to rise, and the expense to you is in the thousands of dollars. We will see what occurs now. However, inflation is a real pain in the behind, as your assets do nothing. As an example, Ethereum did almost nothing over the 3 months in question. Over the course of a year, XRP and Solana accomplished nothing. For an even longer duration, it accomplished nothing as you sat there with no income. My intention is not to imply that these investments are poor. Actually, it's the polar opposite. However, the most astute investors put their cryptocurrency to work for them, allowing them to reap additional returns. As for why you wouldn't, I don't know. These digital assets are still in your possession. It's the same as purchasing a hotel room, but choosing not to use it as a rental. Who wouldn't want to rent out their property if they believe it will increase in value over time? That way, you can pay your mortgage and benefit from the appreciation. So, keeping cryptocurrency in cold storage without doing anything to produce yield is a waste of money. Furthermore, your funds aren't secure if you simply store them on cryptocurrency exchanges such as Coinbase. In reality, hackers stole $400 million from Coinbase and held critical customer data for a ransom of $20 million. Coinbase refused to pay. The hackers had bribed Coinbase workers to gain access to the data. I am writing to bring to your attention an alarming email that Coinbase received not long ago. The assailants said they had information on our clients, and they demanded $20 million in Bitcoin as ransom to keep it secret. In a public statement, I will tell these assailants no. Your ransom demand will not be met by us. My information was allegedly compromised in that incident. I even got a notification in the mail about it. Therefore, I am not relying on an article I read online, but rather on my own personal experience. Therefore, by leaving your cryptocurrency on centralized exchanges, you're not only missing out on free money in the form of yield, but you are also increasing your risk of complete loss, hacking, or account freezing, because crypto is meaningless unless it's your keys. I won't bother telling you this because you already know it. Taking things easy with your money is not an option. Nearly $40 trillion in debt has engulfed the United States.